Welcome to our weekly show focusing on the key macro trends affecting FX and the broader market. Today we're going to be looking at copper and the Aussie dollar. Now in recent weeks we've seen copper prices pushing back towards their all-time highs. Now the longer-term bull case for copper has been well flagged. Electrification requires significant upgrades to networks and infrastructure, and copper is at the core of that process. And yet despite this, the whole mining sector has suffered underinvestment for much of the last decade. Now please remember that none of this is investment advice. It's for education and engagement purposes only. When investing, understand your own risk tolerance, time horizon, and investment objectives. And then invest accordingly. More recently, copper has been overshadowed by the performance of gold and silver, both of which have outperformed over the last few years. But despite this impressive environment for metal commodities, the commodity currencies, like the Australian dollar, have lagged this underlying performance. In fact, for most of the last 25 years, the Aussie dollar and the price of copper have generally moved in lockstep. Over the last 5 years, however, the paths of copper and the Aussie dollar have significantly diverged. The reasons are largely due to the changing nature of global demand. Commodity currencies and the global mining stocks had benefited from both rising volume and rising price, particularly during China's phase of growth at any price from around 2000 to 2015. But since 2020, the nature of China's demand has shifted. The demand is still high, but the rate of change has shifted down a gear as policymakers refocus their efforts on consumption and sustainability rather than urban infrastructure. So where does this leave the commodity currencies? High commodity prices are still supportive, but it's a broader US dollar dynamic that's been in the driving seat. We can see that the broader based emerging market currency index has also been in a lengthy downward trend versus the US dollar. The Aussie dollar has marginally outperformed, but it's clear that a bigger global dynamic is at work. Investors who like the commodity complex have continued to show a preference for the underlying metals, and now, increasingly, mining equities like the XME ETF, which is building some momentum. The metals and miners should therefore continue to be better expressions of the commodity theme than commodity currencies like the Aussie, even when adjusted for volatility. And with that, now let's have a look at some of the questions we've received this week.